Which of the following best exemplifies a conflict of interest in a financial services context? A. A financial advisor recommending a diversified portfolio tailored to a client's risk tolerance. B. An investment banker recommending security to clients while holding personal financial stake in that same security. C. Compliance officer refusing to process trades that are not fully documented. D. Trader following firm policy by reporting all gifts over $200 to the compliance department. The correct answer is B. An investment banker recommending a security to clients who are holding a personal financial stake in that same security. Explanation: a conflict of interest arises when a person in a position of trust has competing professional or personal interests. In this scenario, the investment banker, option B, may be motivated to recommend the security not based on its merits for the client, but due to their own financial interest. This undermines trust and can violate National Instrument 31103. Registration requirements, exemptions, and ongoing registrant obligations, which mandates firms and advisors to manage, avoid, or disclose conflicts of interest transparently. According to principles of integrity in public service, which of the following actions would most likely violate ethical conduct guidelines? A. Reporting suspected fraud through proper whistleblower channels. B. Accepting a small, unsolicited token gift from a vendor during a procurement process. C. Declaring a relationship with a vendor before a procurement review board meeting. D. Refusing to alter project documentation despite pressure from a senior manager. The correct answer is B. Accepting a small, unsolicited token gift from a vendor during a procurement process. Explanation: accepting gifts, even small ones, during procurement process can be perceived as compromising objectivity and may violate Public Sector Integrity Guidelines and Conflict of Interest Act Canada. Such actions can lead to real or perceived bias, undermining public trust. Ethical conduct in public service requires impartiality and transparency, especially in procurement, where fairness is crucial. Which of the following best describes the tone at the top principle in promoting organizational integrity? A. A performance metric system used to evaluate employee productivity. B. An anonymous hotline for employees to report misconduct. C. Senior leadership consistently modeling ethical behavior and enforcing policies. D. The marketing team crafting public relations messages that highlight corporate responsibility. The correct answer is C. Senior leadership consistently modeling ethical behavior and enforcing policies. Explanation: tone at the top refers to how leadership sets the ethical climate of an organization. When senior leaders model ethical conduct, enforce rules, and support compliance mechanisms, it fosters a culture of integrity across the company. This aligns with the expectations of ESA, Canadian Securities Administrators and Frameworks, NI 52110 audit committees, which emphasize corporate governance and ethical leadership. Which regulatory obligation ensures that Canadian investment firms establish policies to detect and prevent unethical behavior such as insider trading or market manipulation? A. National Instrument 51102. Continuous disclosure obligations. B. National Instrument 31103. Registration requirements and ongoing obligations. C. National Instrument 45106. Prospectus and registration exemptions. D. National Instrument 23101. Trading rules. The correct answer is B. National Instrument 31103. Registration requirements and ongoing obligations. Explanation: NI 31103 requires firms to maintain internal controls, including codes of ethics, compliance systems, and supervision mechanisms that detect and deter unethical behavior. It applies to all registered firms and individuals in the securities industry. Insider trading and manipulation are severe breaches of integrity and market fairness, and regulatory frameworks emphasize risk-based supervision to prevent such misconduct. An employee in a public organization discovers that their manager is falsifying expense reports. What is the most integrity-driven course of action under Canadian public service ethical standards? A. Keep quiet to avoid workplace conflict. B. Confront the manager directly in front of the team. C. Report the issue through designated whistleblower protection channels. D. Discuss it casually with coworkers to see if they noticed the same issue. The correct answer is C. Report the issue through designated whistleblower protection channels. Explanation: the most ethical and integrity-driven action is to report suspected wrongdoing through official whistleblower protection channels, which are protected under the Public Servants Disclosure Protection Act (PAPA) in Canada. This ensures accountability while protecting the employee from retaliation. Integrity involves doing what is right even when it is difficult. Using appropriate reporting mechanisms is a key part of ethical behavior in public service. Which of the following is a key pillar of integrity in the Canadian public service? A. Innovation. B. Obedience. C. Accountability. D. Profitability. The correct answer is C. Accountability. Explanation: accountability is a foundational principle of the Canadian Public Service Integrity Framework. Under the Values and Ethics Code for the public sector, public servants must be accountable for their actions and decisions, ensuring transparency and the responsible use of resources. Which of the following is a key objective of establishing a corporate code of conduct? A. Increasing the company's profitability. B. Preventing employee unionization. C. Replacing formal legal obligations. D. Outlining acceptable behavior and promoting ethical standards. The correct answer is D. Outlining acceptable behavior and promoting ethical standards. Explanation: a code of conduct is designed to communicate an organization's ethical expectations and establish behavior standards for employees. It complements legal compliance frameworks like NI 31103 by promoting ethical decision-making and internal accountability. What is the main purpose of whistleblower protection laws in Canada? A. Prevent employees from criticizing the government. B. Discourage employees from going to the media. C. Ensure employees can report wrongdoing without fear of retaliation. D. Punish individuals who leak confidential data. The correct answer is C. Ensure employees can report wrongdoing without fear of retaliation. Explanation: the Public Servants Disclosure Protection Act (PAPA) ensures that employees in the federal public sector can report misconduct, including fraud, abuse, or gross mismanagement, without fear of reprisal. This promotes transparency and accountability within institutions. Which of the following is an example of an ethical fading? A. Forgetting to document meeting. B. Making decision without consulting your manager. C. Prioritizing profit so much that ethical concerns are overlooked. D. Following ethical policies in personal decisions only. The correct answer is C. Prioritizing profit so much that ethical concerns are overlooked. Explanation: ethical fading occurs when the moral aspects of a decision disappear from view, often due to pressure to meet business objectives. This cognitive bias can lead individuals to rationalize unethical decisions, contrary to integrity principles. Which of the following best illustrates a breach of fiduciary duty in the financial sector? A. Charging clients according to the agreed-upon fee schedule. B. Recommending high-fee products that benefit the advisor over the client. C. Informing clients of changes in market conditions. D. Updating clients' investment profiles annually. The correct answer is B. Recommending high-fee products that benefit the advisor over the client. Explanation: fiduciary duty requires putting the client's interests first. Recommending products primarily for the advisor's benefit is violation and may lead to regulatory sanctions under CSA et Eroxt. In the context of securities compliance, Know Your Client (KIC) rules primarily aim to A. Generate more marketing leads. B. Reduce customer service inquiries. C. Understand clients' financial situation to offer suitable investments. D. Increase sales commissions. The correct answer is C. Understand a client's financial situation to offer suitable investments. Explanation: KIC is legal and regulatory requirement under NI 31103 and IC Rule 3200, ensuring advisors understand clients' financial goals, risk tolerance, and investment knowledge. This ensures suitability and prevents mis-selling and fraud. Under Canadian public sector integrity standards, employees must A. Uphold the law and report violations. B. Avoid speaking out about wrongdoing. C. Act in the interest of their immediate supervisor. D. Always remain neutral in workplace disputes. The correct answer is A. Uphold the law and report violations. Explanation: public servants must act in accordance with the law and are encouraged to report violations through protected disclosure mechanisms. This aligns with accountability and respect for democracy outlined in Canada's Values and Ethics Code. Which of the following scenarios involves potential procurement fraud? A. Including multiple bidders in the process. B. Selecting a vendor based solely on preset evaluation criteria. C. Accepting gifts from a supplier during the bidding process. D. Using a competitive request for proposal RFE. The correct answer is C. Accepting gifts from a supplier during the bidding process. Explanation: accepting gifts from suppliers may compromise impartiality and violate Government of Canada Contracting Policy and Conflicts of Interest Act, potentially constituting procurement fraud or bribery. Integrity risk in an organization refers to the risk of A. Losing customers to competitors, B. Having poor social media reputation, C. Employees or systems engaging in unethical, illegal, or dishonest acts, D. System performance degradation. The correct answer is C. Employees or systems engaging in unethical, illegal, or dishonest acts. Explanation: integrity risk threatens an organization's reputation, legal standing, and public trust. It includes acts such as fraud, corruption, and bribery, which may breach anti-corruption laws like the Corruption of Foreign Public Officials Act (CFPOA). Under Canadian securities laws, which of the following would most likely be classified as insider trading? A. A trader buys shares based on public earnings reports. B. A director trades shares based on non-public merger news. C. An investor acts on technical analysis. D. An advisor balances a portfolio due to market volatility. The correct answer is B. A director trades shares based on non-public merger news. Explanation: insider trading occurs when someone uses material, non-public information to make securities trades. It violates securities laws, e.g. Section 76 of the Ontario Securities Act, and undermines market fairness and investor trust. Which action demonstrates strong personal integrity in a professional setting? A. Withholding information that could damage the company's reputation. B. Taking credit for colleagues' work. C. Refusing to participate in dishonest business practice. D. Sharing confidential client data for convenience. The correct answer is C. Refusing to participate in a dishonest business practice. Explanation: refusing to engage in dishonest practices, even under pressure, is a hallmark of personal integrity. Ethical behavior is about doing what's right, even when it's difficult, and is vital in regulated sectors like finance and government. Which of the following actions is consistent with maintaining integrity in reporting? A. Ignoring accounting errors to protect a colleague. B. Delaying reporting of misconduct until after a bonus is paid. C. Providing accurate financial data regardless of personal consequences. D. Rewriting reports to avoid audit scrutiny. The correct answer is C. Providing accurate financial data regardless of personal consequences. Explanation: maintaining integrity in reporting means being transparent and honest, even when it might lead to personal or organizational consequences. This aligns with Canadian auditing standards and principles of truthful disclosure. What is the role of internal audit in promoting integrity? A. Approving vendor contracts. B. Concealing financial discrepancies. C. Assessing and advising on risk management and ethical practices. D. Managing human resources. The correct answer is C. Assessing and advising on risk management and ethical practices. Explanation: internal audits help ensure adherence to laws, policies, and ethical standards by identifying risks, including integrity-related concerns. The Treasury Board of Canada Secretariat emphasizes internal audits as a tool to promote accountability and compliance. In a regulated financial firm, which of the following would best help prevent integrity breaches? A. Quarterly social media campaigns. B. Ethical training programs and compliance monitoring. C. Cutting compliance staff to reduce costs. D. Relying solely on employee trust. The correct answer is B. Ethical training programs and compliance monitoring. Explanation: training and compliance systems help ensure employees understand ethical obligations and firm policies supporting obligations under NI 31103. Preventative frameworks are essential for reducing integrity risk. What is the most appropriate response when faced with pressure from a superior to falsify records? A. Comply to maintain job security. B. Seek legal advice and report through proper channels. C. Ignore the request and hope it resolves itself. D. Informally complain to coworkers. The correct answer is B. Seek legal advice and report through proper channels. Explanation. Falsifying records is unethical and illegal. The correct response is to report the incident through protected channels and, if necessary, seek legal counsel. This ensures compliance with public sector ethics and legal protections under PAP. Why is transparency critical in maintaining institutional integrity? A. It reduces paperwork. B. It helps it increase profits quickly. C. It builds public trust and ensures decisions are open to scrutiny. D. It replaces the need for audits. The correct answer is C. It builds public trust and ensures decisions are open to scrutiny. Explanation. Transparency means openness in decision-making and reporting, which builds trust. It's the core principle of Canada's Open Government Initiative and ensures institutions are accountable to stakeholders. Which of the following behaviours would most likely violate the Conflict of Interest Act? A. Declining a position on a vendor's advisory board. B. Recusing yourself from vote affecting family business. C. Failing to disclose financial interest in company you regulate. D. Documenting all outside activities annually. The correct answer is C. Failing to disclose a financial interest in a company you regulate. Explanation. Not disclosing a financial interest creates a conflict and is a violation of the Conflict of Interest Act, Canada. Public servants and regulated professionals are required to declare financial interests to avoid biased decisions. Which of the following best defines integrity in a professional context? A. Achieving results by any means necessary. B. Consistently acting according to ethical principles, even when no one is watching. C. Always following orders from superiors. D. Prioritizing company profits over stakeholder values. The correct answer is B. Consistently acting according to ethical principles, even when no one is watching. Explanation. Integrity means doing the right thing even when no one is watching in professional environments, especially in the public sector or finance. Acting with honesty, fairness, and transparency is critical. The Values and Ethics Code for the Public Sector and the Canadian Securities Administrators (CSA) emphasize integrity as key professional expectation. Which of the following is not a principle outlined in Canada's Values and Ethics Code for the Public Sector? A. Excellence. B. Stewardship. C. Transparency. D. Respect for democracy. The correct answer is A. Excellence. Explanation. While excellence is a positive trait, it is not one of the 5 core values outlined in the Values and Ethics Code for the Public Sector, which are respect for democracy, respect for people, integrity, stewardship, and excellence in public service. No, excellence is not one of the named 5 values, though quality work is encouraged. Which of the following actions by a compliance officer most strongly supports integrity in financial services? A. Ignoring routine control lapses to reduce workload. B. Adjusting records to align with client expectations. C. Documenting and escalating potential violations to senior management. D. Advising staff to bypass documentation for small trades. The correct answer is C. Documenting and escalating potential violations to senior management. Explanation. Compliance officers play a critical role in safeguarding organizational integrity. Escalating violations ensures transparency and alignment with NI 31103 requirements for internal controls, supervision, and ethical conduct. Which of the following is most likely to create a perception of bias in a public procurement process? A. Allowing open and competitive bidding. B. Pre-selecting a vendor based on a long-term personal friendship. C. Publishing transparent selection criteria. D. Seeking multiple independent quotes. The correct answer is B. Pre-selecting a vendor based on a long-term personal friendship. Explanation. Pre-selecting a vendor based on a personal relationship can lead to real or perceived bias, undermining the fairness and integrity of public procurement. According to Government of Canada contracting policy, conflict must be avoided to ensure transparency and fairness. What is a zero-tolerance policy in the context of organizational ethics? A. Allowing employees to make mistakes without penalty. B. Enforcing strict consequences for unethical behavior, regardless of rank. C. Letting executives determine ethical boundaries. D. Ignoring minor violations to maintain morale. The correct answer is B. Enforcing strict consequences for unethical behavior, regardless of rank. A zero-tolerance policy means all unethical behavior will be addressed, regardless of who commits it. This promotes fairness, accountability, and helps prevent a culture of impunity. In Canadian corporate governance, which document outlines the ethical expectations for board members and executives, A. The federal budget, B. The company's HR policy, C. The board's code of ethics or code of conduct, D. The marketing strategy. The correct answer is C. The board's code of ethics or code of conduct. Explanation. Code of ethics or code of conduct for board members outlines expectations regarding integrity, accountability, and compliance with legal obligations such as NI 581001, disclosure of corporate governance practices. Which of the following most effectively strengthens a culture of integrity within an organization? A. Ignoring ethical breaches for high performers. B. Providing regular ethics training and rewarding ethical behavior. C. Keeping policies confidential from staff. D. Encouraging loyalty to managers over rules. The correct answer is B. Providing regular ethics training and rewarding ethical behavior. Explanation. Ethics training and recognition of ethical behavior reinforce integrity at all levels. According to best practices, such as those from the Canadian Centre for Ethics and Corporate Policy, culture is shaped by consistent messaging, clear policies, and visible ethical leadership. Which Canadian regulation is specifically designed to prevent foreign bribery by Canadian businesses operating abroad? A. Competition Act. B. Personal Information Protection and Electronic Documents Act, PIPEDA. C. Corruption of Foreign Public Officials Act, CFPOA. D. Investment Canada Act. The correct answer is C. Corruption of Foreign Public Officials Act, CFPOA. Explanation. The Corruption of Foreign Public Officials Act, CFPOA, criminalizes the bribery of foreign public officials by Canadians or Canadian businesses abroad. It reinforces Canada's commitment to international anti-corruption standards under the Oaked Anti-Bribery Convention.